This is the Friday, January 18th, 2019 version of the Market Plus segment. Joining us now is Elaine Kub. Elaine, welcome back.
Good to be here.
Elaine, I forced your hand there right at the end of the program. I want to pick back up on that. We were talking about if China actually culled 20% of their hog herd. You said you could see prices going up to 80s, 90s maybe?
Yeah, it just made me think that all of that speculative fervor that you saw 6 weeks ago, let's say in the hog market, that would have been justified. If that really happens, that would be justified, and then maybe some. I don't know how much the speculators were pricing in when they were, you know, trading hog futures or July hog futures above $80. So if those numbers actually materialized, then certainly that $80 price and upwards would have been justified, or would be justified again.
Isn't it fair to argue that maybe we could see even higher than $80?
Yeah, sure,
I mean, normally, you know, summer months we already pick up, there's grilling season. $80 seems almost too low to me.
Yeah, absolutely you could make justification for it. This 20% figure is humongous. 20% of 700 million hogs.
Yeah.
I don't even know if the U.S., I honestly, we'd have to do the math, if the U.S. could even pick up that slack. I have no idea.
It seems too, and we were talking about this a little bit here before we started recording, it seems strange that China would release this fact of, oh, we might have to cull 20% of our herd here, kind of in the midst of the U.S.-Chinese trade negotiations. What are your thoughts on that?
Well, my thoughts are, anytime we see agricultural statistics from the Chinese government, we kind of worry. I mean, we worry if they've been spun,
right, because
ordinarily, we worry that they're spinning them to their advantage in some way to make their industry look better or stronger in a better negotiating position than it is. So for them to come out and publicly say that their hog industry might be cut by 20%, that doesn't put them in a good negotiating position to come and buy not only pork, but poultry or any sort of protein from any country. So I don't know why they did it.
Yeah, it's just kind of a strange thing that we're going to have to see what happens here.
Yeah.
All right, let's take a couple of social media questions, Elaine. We've got Matt in Dyersville, Iowa. He said, is there any factoring in the cattle market the record number of dairy cattle being culled and heifers not making it to the milking barns?
Yeah, that is so. When you look out at the sort of profitability of the livestock sector, everything looks pretty much okay except for dairy. Dairy is really ugly. But as far as how it plays into the beef sector right now, I think in winter it's less of a factor than ordinarily because these dairy animals are not going to be the gaining. They're not going to come into the slaughter barns, you know, with a lot of them grading choice or bringing in big weights, right? Like they're not the competition, let's say, if we want to say that to the beef animals. But the numbers, the sheer numbers of it, sure, is something that needs to be weighed in there.
How much should we be weighing that in?
I don't know. I don't know off the top of my head, But well, wouldn't it be nice if we had a government report or something that would tell us, like a cattle on feed report next week?
Well, and that's an interesting question. We've got a question. I'm going to skip down on the list here to the end because we had one about that specifically discussing, you know, this government shutdown thing and what are people supposed to be trading on. We've got Stan from Twitter. He said, large commodity companies have their own market analysis team. Farmers rely on USDA reports for marketing information, so how much of a disadvantage are farmers facing with this government shutdown continuing?
It is a problem, and it hasn't bothered me too much that we didn't have a supply and demand report in January because kind of who cares. But Stan's point here is, so these large like commercial grain trading firms, for instance, it's not necessarily their team of analysts, it's their actual physical data. They have an accounting sheet that they know how much grain they have in storage, they know how much they have purchased from farmers, and information like that they're not going to share with the public, but the federal government can compel that information. So the export information, nobody would give that out freely unless the federal government was compelling them to do that, or grain stocks information, or cattle on feed numbers, or commitments of traders numbers. Nobody just shares that information publicly unless they have to give it to the government. So that is why we would really like to have that information, and it would make it more fair. That's why these reports exist in the first place, is to level the playing field for all market participants so that you can't have some of this hiding in the dark shadows. And it's irritating to me personally as a statistician, if you go back through these years worth of data, so if you want to compare data in 2020 to what happened in 2019 at this time of year, we won't be able to do it. We can't do it in 2013 when there was the shutdown either. But those gaps in the whole data series, those are problematic when you want to have a whole series of data to compare over time.
So really, it sounds like from what you're saying, there's nothing as a private farmer that I can do about the fact that I'm not getting any information from the government.
Yeah. Correct.
Nothing.
Call your representatives and senators, I guess. Yeah.
But
you can't, we can't compel ADM or Cargill or anybody to tell us what their grain stocks are or how much they're exporting. No, we don't know.
That's an interesting word that you're using, is compelling them to tell us, or the government compels them.
I mean, how else? Why else would they don't do it for the goodness, out of the goodness of their hearts.
I know.
We can see it in the market. So if you started to see, like, if something major shifted and changed, we would see a change in the spreads because the commercials would be readjusting how they're going to store these things. We could see it in the freight. If you actually started to see China, like, buying lots of shuttle trains of soybeans going to the PNW, we would start to see freight shuttle prices change. So there are ways that we can observe it from market information, but this background fundamental information we cannot observe.
Those are the things they need to watch, though, are those little nitty-gritty things in the market that you give some indication
to watch it. But
well, to level the playing field, I guess that's really all we have to go off of.
Yes, and eventually we would like to have that information.
Yes, of course, everybody would like to have that information. Interesting, though, Elaine. Let's take a question here about the live cattle futures market. We talked about it a little bit in the main program, but Matt in Amherst, Wisconsin said, live cattle futures, they keep grinding higher. How much gas is left in that tank?
I don't think a lot. I mean, I know people have got really bulled up here, but I think we saw it. You know, we saw the weather forecast that was traded. We're bumping up, as I mentioned on the show, we're bumping up against prices where we weren't able to break through last year at this time. So maybe there's another couple of dollars in there. Maybe you get up to 130. I doubt it. But if I was somebody who had cattle that were going to be ready to market in that April timeframe, I'd be looking at this as an opportunity just to lock in that price.
Elaine, we've got, this is a little bit of a package question here. Vance in Nebraska City. It's a 3 or 4-parter, so we're going to try and break this down. So first question is, how do end users price grains? For example, are they buying 950 January 20 beans? Do they protect with options? Is it only speculators and producers trading that far out, or do end products or producers have high enough margins that $9.50 is still good enough for them as a hedge against $12 beans? That's a lot to take in.
No, it's a good question. And again, I cannot speak to exactly what, a grain processing company's hedge book looks like because they don't share that information publicly. But is the margins there? It absolutely, the crush margins pencil out right now real nice in soybeans. And we saw that in the NOPA crush report, which is not a government report. So that was released and it beat expectations. And so we are seeing lots of optimism and growth in soybean crushing. Speaking
of the NOPA crush numbers, we saw the 3rd highest record on history. Do we have the soy meal demand right now to keep having those high crush and capacity numbers, or is it because of the larger scale, we've got cheap soybeans, so we might as well keep processing?
It's both. So I think, yes, there's opportunities from the input cost is helping that crush very much. But also that the shortage of soybean meal coming out of Argentina in the past marketing year is creating good opportunities for the U.S. to be going out to the global soybean market, so the meal market.
How long do we have to kind of eat this lion's share up until Argentina's back up in production?
Well, which is shortly, so February, March.
Unless they had a weather issue, is that really all we can bank on?
And Argentina doesn't. So their soybean that are, will be harvested here in next month. They're not a Brazil scenario. It's not hot, dry weather in Argentina. It's nice weather. They're going to have a good crop.
So we can probably expect to see soy meal
have some competition again in 2019.
All right. Elaine, final question for you here, kind of a bigger picture one here too as well. Lee in Mankato, Minnesota, he said, we often hear that the large-scale farmers, let's say 1,500 acres of corn or about the same of beans, survive hard times like these better than smaller operators. This is due to economies of scale, we are told. Is this true? And do the bankruptcy numbers bear that out?
There are not enough bankruptcies yet so far. Good, knock on wood. We're grateful for that. We don't have enough of them to really study that phenomenon. But the economies of scale probably works especially from an equipment standpoint. Like there's probably a minimum size above which you must be, otherwise financing equipment becomes prohibitive. or you could start to get real benefits from the economies of scale. But I think the real differentiator is not the total number of acres that you're farming, it's how many of those acres you perhaps own, right? Or what is your land cost? And are those land costs paid out in cash as rent, or are those land costs just opportunity costs that go, you know, on your financial sheets, but you can get by from year to year without paying out that cash? So that's the differentiator, I think, more than size will be the predictor of success.
Interesting. All right, Elaine Kub, thank you so much.
Thanks, Delaney.
That wraps up Market Plus. Join us again next week when we'll look at a 100-year-old farmer's market in the middle of a food desert, and Ted Seifert will join me at the Market to Market table. Until then, thanks for watching, listening, or reading. I'm Delaney Howell. Have a great week.